Here's to bold visionaries, faithful investors who make God the goal. While some may call them crazy, we see a joyful adventure. God has empowered us to use courageous capital, solving the world's greatest problems under His power for His glory. Welcome to the Faith-Driven Investor Podcast. Opinions expressed in this podcast, including the team and guests, are solely their opinions. Hosts and guests may maintain positions and securities discussed. This podcast is for informational purposes only. It should not be relied upon as specific investment advice for any individual or organization. Thanks for listening.
Friends, welcome back to another episode of the Faith-Driven Investor Podcast. Awesome to have you with us for what is our September Marks on the Markets episode. And we're doing something fun today as we're taking a specific look at the energy markets, and even more specific than that, the oil and gas markets. And because of that, we've got a couple of legends, close friends of the Faith-Driven Investor movement here with us today. Jordan Strebeck of Fortress Energy Partners, Chaz Perry of PBEX, checking in from the Permian Basin in Midland, Texas. I'm joined by Luke Roush, our co-host. Luke will give you the first word, man. We're post-Labor Day. Football is in action. Fall is upon us. How are you?
I'm doing great. Great to be here today, Richard. And, this is a topic that is an incredibly important one for the lifestyle we enjoy here in the United States and around the world. And so it's amazing that we're 200 podcasts into the Faith-Driven Investor Podcast and haven't yet really zoomed in on what's going on with oil and gas. But it's a timely moment for this industry. And we've got two people who have dedicated their careers to really understanding this space and how to not just create value, but also be impactful. So really, really grateful to have both Chaz and Jordan on with us.
Go ahead, Chaz. Excuse me.
Oh, I was just saying thank you for having us.
Oh, you bet. And I think many of our listeners, like myself, will be pretty novice to the oil and gas space, which is hard to admit as a proud Texan. But man, maybe Chaz, tell us, what is the big deal of why you guys are in Midland and the Permian Basin and all those things we hear about West Texas, and why you've built your companies in those particular locations?
I mean, honestly, it's the view out my window. It's probably the gorgeous place you've ever been to in your entire life. No, honestly, I grew up in Midland. I've kind of worked all over the country, but really in regards to our business, roughly half the U.S. oil production is extracted from within 200 miles of Midland. So when people say that Midland's kind of the epicenter of the energy industry, it's really true. So we're in a highly relational industry, and so if you're not here on the ground making deals, building relationships, building your family here, it's a hard place to move into. So it's a great place and from a family standpoint, my wife's from Amarillo. We met at Tech, which once again, we're 1-0, got a big win against a highly competitive team this weekend. And we've lived in Kentucky, we've lived in West Virginia, we've lived in Pittsburgh. I'm trying to think of other places. Anyway, when we had our first son, we really wanted to get back close to home, be around family and friends, and just the relationships that have been built are incredible.
I love it. Jordan, what about you, man? Maybe ask it this way. When I hear the words oil is a certain amount of barrel, explain that for me and the listeners at home and all of that through kind of some of your background and the work you're doing.
Sure. Well, first of all, thanks for having us on. I think Chaz is probably, generally speaking, he probably gets called before you're 200 episodes into a podcast. But that's probably about for most of my folks, that's probably about the time I get invited on. That's really start scraping the bottom of the barrel. So appreciate y'all having us on. And I do want to defend Midland from Chaz's, insult there at the beginning. I think Midland is beautiful. It's we're out here on the high plains. And I like to joke, when I'm on the eastern part of the United States, I get a little claustrophobic. So I like being able to see. We're up here. It's a little bit flat, but the good news is, if the Russians are coming, we'll know by about the time they hit Abilene, and we'll have some time to prepare ourselves. So I personally think the sunsets and the people in West Texas are impossible to beat. And honestly, my story is a little bit similar to Chaz, just in the sense that I grew up in the region about 4 hours northwest of here, and had never lived in Midland. My wife and I had lived in Lubbock for about a decade. Spent some time on the East Coast. I've lived in DC. I lived in Boston for a couple of years, and while we were finishing up business school, we knew that we wanted to raise our family in West Texas. We had two young boys, and so when you were talking about West Texas in 2013, doesn't take a genius. Oil was at 120 something dollars a barrel, and when we were kind of asking around, they were like, "Well, they're hiring in Midland," and so kind of wound up out here not really knowing anything about oil and gas, but just wanted to live in West Texas, and immediately fell in love with Midland, fell in love with the industry, became quick friends. Actually, Chaz and Lindsay were some of our first friends that we made out here. My wife was a photographer, and somebody had gifted them a session. They bid on a session at a ministry event, and so the Perrys, my wife drove down from Lubbock, took the Perrys family photos, and so when we were moving to Midland, she emailed Lindsay and was like, "Hey, we're moving to Midland. Don't know very many people. Like, what's going on?" And Lindsay and Chaz took us in, and have been dear friends since. But one of the cool things about Midland is that everything does revolve around oil and gas. So I kind of joke that, in Midland, whether you're a dentist or whether you're a hand on a drilling rig, like, you care about the price of oil. And it's really true. So when you drive down Wall Street here, the OG Wall Street, not the one in New York, but the one here in Midland, America, you'll drive past billboards that have that can change what's on the screen. And a lot of those are going to have the price of oil, because it sort of, everyone's life revolves around it. And so, and in a lot of ways, even though the price of oil is half of what it was when we moved out here, not much has changed with respect to the amount of sort of the number of people whose lives that impacts out here. So when you see the price of oil, people in Midland, whether you probably got some eighth graders that are tracking the price of oil out here for sure.
Talk a little bit about just what each of your firms does. I think for a lot of people, we think oil and gas and we think ExxonMobil or big firms like that. Maybe share a little bit more about what your firms do.
Go ahead, Jordan.
Well, I start by saying we're a poor man's PBEX. So we hope to one day be as successful and well known as Chaz and his gang. We're a lot newer to the scene. We Fortress started in 2017. So my business partner Daniel Charbonnet and I had been good friends since college. And I had been at a private equity-backed company called Piedra Resources. Daniel had been at a PE-backed group called Crown Rock or Crown Quest. And so we each left our respective employers and went out on our own and started Fortress in 2017. And basically, in a nutshell, I tell people we occupy most of the upstream space, so long as it doesn't involve actually operating a rig. So that's where Chaz is a little more of an oil man than me. They're actually operating a rig. But Fortress, what we do is we work with family offices, go raise funds, and generally are buying either minerals and royalties or buying non-operated working interests. And so we're on both sides of the house, so to speak, both minerals and non-op. And so I've been doing that for about 8.5 years.
Yeah, I maybe I'm the dumb one, Jordan. There's a lot of logistics that comes with drilling wells. Similar to Jordan, we were focused in the mineral space. That's where I started my first business up in West Virginia, Appalachia, solely focused on buying minerals, allowed other operators to develop those minerals, and we simply got a royalty. Did a similar business in Oklahoma, Mid-Con, and then about 9 years ago started PBEX, focused on the non-op side, mineral side. And about 2 years ago, we saw an opportunity to really build our team from an operational standpoint, and get into the drilling and production of oil and gas wells. It's been a big learning curve. There's a lot of components that go with it. And just to give you a little bit of backstory, historically, this has been a vertical play. So there's lots of vertical wells that have been drilled for a really long time. Technology has changed our industry in a pretty significant way. There's now, I mean, we just got done drilling 10 wells that were drilled essentially 2 miles vertically and then 3 miles horizontally. And so, which is hard to believe that you can do that.
That's
So
nuts.
so there's really two components to this business. One, at some level, it's a real estate play. If you can't actually put acreage together to develop land horizontally at 2 to 3 mile runways, it doesn't mean a lot much anymore. If you can go drill a vertical well, that's just not of any sort of interest, and it all revolves around economics and ultimately the footprint that you can, the minimal footprint that you can drill from one pad of land and essentially hitting as many formations and wells as possible. So I don't mean to get into so many details. There's a lot of intricacies involved with it, but we put the land together, and then we built the team out to ultimately drill and develop that land. So there's timing components, there's rig schedule components. So all of these things really have to line up well to make this happen. So we've been super fortunate with the team we've built. We went from 7 about 2 years ago to 35. We've seen a big consolidation in our industry. So we got a really, we still kind of squint our eyes at the guys that have come over to PBEX, if I'm being honest. So got a super team that's done just a fantastic job. And but yeah, like I said, some days I do miss the days of getting a letter saying somebody else is going to drill a well. You sign it, write them a check, and you're kind of done. Now there's a lot more that goes into that planning process.
Now we're free riding off you, Chaz. We're letting you operate and just cast. So when Chaz and I say minerals, one thing that might be helpful to clarify, just because most sectors of the economy don't have something comparable, it's really kind of a unique thing in a lot of respects to the oil and gas space. But where we both started our careers is this idea of the mineral estate is owned in the United States. It's owned by private individuals in large part. And so, for instance, like, if I just went down the road 5 miles to any given horizontal pad in Midland County, you've got the surface that was once upon a time owned by somebody, and then they own from the surface all the way to the center of the earth, and say they own the right to what's below the surface as well as what's on the surface. And then over time, especially in the Permian, you've seen a lot of instances where the minerals get severed from the actual surface. And even if they're together, the bottom line in our industry has been that whoever owns the minerals, and usually in the Permian, that's a little more chopped up, but whoever owns the minerals owns the right to produce those hydrocarbons. And most of the time, or copper or whatever else might be there, in our case, it just so happens to be lots and lots of oil and gas. And so whoever owns those minerals has the right to produce them, but generally speaking, historically has not had the expertise or the capital to do so. And so the trade would be the mineral owners would sign a lease with an operator. The operator comes in and sort of just at a high level, the trade looks something like this. Okay, operator, you pay me, the mineral owner, an upfront bonus per acre, and then you agree to do a certain amount of development. You will come and drill a certain number of wells. You'll produce out of those wells. And as you drill those wells, the deal is the operator pays 100% of the costs to drill it and 100% of the costs to operate it. And the minerals get a cut, not of the profit from the wells, but of the top line revenue from the wells. And so when I moved out here and was learning about this space called minerals, it kind of broke my brain, to be honest with you, because I'd never heard of anything like this. I'm like, so wait a second. So you're telling me they pay all the money to drill the wells, but they don't pay us. They don't have to get there. No, it's like, no. You get it on day one, top line revenue. And I was like, boy, this makes a whole heck of a lot of sense. and the minerals are owned in perpetuity, and there are a lot of really interesting and special things about it in the mineral space that's kind of unique to oil and gas. But so when Chaz and I talk about that, like being in the mineral space, we're in a lot of ways, I've heard people say like, oh, well, the mineral owner is kind of like the landlord, and the operator or the oil and gas company that's drilling and operating the wells is kind of like the tenant. And that's a little bit similar. And so someone like Chaz is now on both sides of that table, owning minerals and being the operator. But it's a kind of a unique distinction in that the mineral space a lot less risky, doesn't bear any of the operated leverage or any of that sort of stuff on their side, and on the operated side, that's where you see kind of when most people think of oil and gas, that's what they're thinking of, not the boring mineral guys doing our stuff in an Excel spreadsheet. They're thinking of the guys that are actually have a rig out there and are poking holes in the ground.
I love it. Man, that's really helpful canvassing the space, guys. And entertain me, if you will, just one more time with a little bit more kind of terminology definition. And then we're taking this conversation into where it ultimately is going to go. And that is this, what Luke mentioned up front, and that is the timely nature of this conversation, that there's the U.S. demand for energy and oil and gas still being kind of big brother in the room. 70% of U.S. energy consumption still comes via oil and gas. And so we're going there, but maybe kind of define a little bit more on a terminology front. When you hear people say upstream, midstream, downstream, what they're talking about, conventional oil fields, what you see with offshore rigs, and then shale, and kind of where you guys play into that. And then let's get into kind of the markets conversation, a little bit of the flavor of the day. Chaz, we'll start with you.
So when you're talking upstream, midstream, downstream, so I'm in the upstream space. So we're the ones actually drilling, developing, producing that product. Then you get to the midstream. Once you get that product out of the ground, you got to transport it to ultimately the downstream space, the refinery. So it takes all three of those facets to actually make what you're ultimately sticking in your car or your plane. So we got a very crude product that's coming out of the ground. It's got to get moved. So there's your midstream space, and then ultimately going to the refinery where all those products are extracted from that crude product to actually be usable. So that's where those three terminologies kind of come into play. Once again, without all three, we can't use what we're actually extracting.
Yep. And then you mentioned just kind of talking about the different space, and any geologists or technical people listening to this are going to listen to the finance guy explain it and go, boy, what a dimwit. But you talked about sort of conventional, unconventional, some of that sort of stuff. So when I moved out here in 2013, I literally, I was like, so how do you get the oil out of the ground? It's like in a lake underground, and you need to get like kind of like a straw and suck it out? And they were like, kind of looking around like, are we getting punked here? Like, this guy really doesn't know. And I'm like, I have no idea. And so for years and years, the way that oil and gas was extracted was what you just referred to as like conventional plays, where there was some sort of structure, a salt dome, something that trapped hydrocarbons that were migrating upward, and then something trapped them, and they were very, very highly pressured. So if you drilled into that formation or into that little structure or geologic, sort of area, you might hit something, and all of a sudden you have a bunch of porosity, you have a bunch of permeability underground, and it comes flowing out. The other flip side of that, though, was, when you look at a map of vertical wells that were drilled in the Permian, say, pre-Wolfberry boom, in the 2000s, it looks real. It kind of looks a little funky because people were chasing these structures, and okay, there's this reef up here, or there's this sandbar here, and there was all this stuff, and so you could literally drill a well right here, and a mile that way, not have anything, and so you hear people talk about dry holes and some of that terminology, and the unconventional, I think, sort of revolution was, if you look back behind me, over my shoulder here, you see sort of a log of the Permian and the different formations. And effectively, that's what has changed is now with horizontal technology and with sort of modern hydraulic fracturing techniques, you're able to actually drill not into the just sort of things that trapped hydrocarbons that were migrating up the column, but you're actually able to drill into the source rocks where there's a ton of actually organic, like there's oil in place, but historically there was, if you drilled into it, there was not a whole lot of luck in terms of actually the permeability and porosity was not sufficient to let that oil actually get produced at an economic rate. And so now in the Permian, for instance, like Chaz mentioned, they're drilling wells 10,000 feet deep. So they're drilling 2 miles down, and then they're turning that drill string and going out 3 miles, which is, it still blows my mind that we can do this. And so they might be able to do that on any one given tract. You might have 5 or 6 different zones where they're going, okay, we can drill one here, and there goes a lateral, and then we'll drill another one that's going to be, we're going to, be spaced out 600 feet, but down in a different zone, and then we're going to drill a deeper zone and a deeper zone, and all of a sudden it kind of looks from a gun barrel view like a layer cake. And that's been the revolution on the unconventional side. And as a result, what's happened in our industry is it's turned into a lot more of a manufacturing kind of mode in a lot of ways. Like because of the fact that you're drilling into the actual source rock, it's reduced a lot of the call it, maybe the geologic variability. I mean, you still have some of that, but it's a lot less of a deal than it was, call it 30, 40 years ago. And so that's now you're looking at, it's not uncommon for an operator to go stick a rig on a pad and drill, they might drill 24 wells before they turn one of them on. And it's like, holy smokes, they just sunk $200 million of CapEx into the ground before they turned a well on, because that's kind of their, they're in their manufacturing process now. So that's been the jump on that side.
Maybe talk a little bit about, so what you just spoke to, Jordan, in terms of the technology changes that have occurred in the last 15, 20 years. Maybe speak a little bit about what that means, not just in terms of reducing the risk of exploration, but also in terms of expanding the capacity that is there. When I was growing up, we were super concerned about our reliance on Middle East oil. And maybe I'd love to hear you and Chaz riff a little bit about just supply and demand and how we've been able as a nation to meet the demand curve with additional supply. I'd love to hear you guys riff on that.
Yeah, I think 20 years ago, that was a very real, that was a real question. Like, have we, what are we going to do from a supply standpoint? And the technology, and I would add the ingenuity just of the American oil and gas industry. It really is phenomenal. And Chaz can attest to this, but so many of these massive advancements that we've seen, even in the last 10 years in the Permian, they didn't come from, necessarily like an MIT researcher in a lab somewhere. These are coming from on the ground, like just ordinary people that you'd see at, at the grocery store on a Sunday and not think that they were, anything all that brilliant. And they're trying out stuff in the field that's getting widely adopted and really changing how we produce hydrocarbons. But I mean, 20 years ago, I think as a country, we produced somewhere in the neighborhood of like 6 million barrels a day of actual oil across the country. And I think this year, I think we'll average probably over 13. And when you think about that, the vast majority of that has come as a result of the technological advances and what our industry's been able to do, not just in the Permian, but places like the Bakken, the Eagle Ford, the Uinta Basin, all those places. So it's been phenomenal to watch just over the past decade, to be honest.
Yeah, I just kind of to lead into that, what Jordan said, these technological advances didn't come from the Exxon Chevrons of the world. These are normal guys that, have really, that went out, had partners, tested stuff. A lot of it didn't work until they finally cracked that nut. So back in the late 70s, it was, we're at peak oil. We're never going to produce anymore. And then the Wolfberry vertical play comes along, and then that goes away, and then you got this horizontal technology with really sophisticated hydro fracking that really revamped really our country. And so we went from being completely dependent on Saudi oil to being completely independent. So as a country, it's really important when you're completely relying on a product that you use every day, basically every minute of our day. Don't really care what you do. To be relying on somebody else for that product could be a dangerous place to live. So
Yeah, so let's talk more about the geopolitics of it all, because we're the largest producer of oil and gas here in the U.S. and one of the biggest exporters of liquid natural gas and crude. And so, Jordan, you talked about the comparison of how that changes things now from versus 15 to 20 years ago. Talk about the dynamics of President Trump takes office and you hear the words drill, baby, drill. You've got trade wars taking place with tariffs. And I know there's nuance and differences of like how tariffs would actually affect anything in the oil and gas world. But when I think of these rigs and the massive amounts of steel that's needed, now the tariff kind of conversation enters into the picture. But what is the international dynamics currently with just energy production, the U.S.'s role when you think about countries like Russia and the situation they're in right now internationally with all that is going on from just a conflict standpoint with Ukraine and kind of the way we've slapped them on the wrist, and then this body that is OPEC. And so I know I'm opening up a large kind of bigger conversation here. How have you guys kind of processed the international conversation and all that's taken place from your vantage point?
Well, I mean, yeah, you I think hit the nail on the head. It's a multivariate equation. I think we generally have just tried to focus on the things we can focus on. And we learned a long time ago that OPEC doesn't really care a whole lot about what we think. And I've learned also, like President Trump, neither he nor anyone in his administration has called and asked me my opinion. So I can opine all I want, but at the end of the day, doesn't make much difference. But it is a unique time in the sense that you're right. Tariffs and the uncertainty that comes with that have absolutely put a squeeze on the drilling and completion of wells. That is a very real challenge, and I think it's especially felt on the service side of the industry. Not necessarily. We'll see how much that flows through to the actual operators. I suspect some. But the other thing that is a very unique time is it's just, I think President Trump's going, "Hey, drill, baby, drill," and our industry has really said, like, "No, Mr. President, no." I mean, it's not. I mean, for lack of better, I don't mean to be flippant, but I think our industry has looked around, and thanks to the massive consolidation that Chad's referenced earlier, honestly, I think the industry learned a valuable lesson. Even pre-COVID in 2019, the public markets really slapped our industry on the hand hard and said, you're lighting capital on fire and you are not returning enough value to investors. And until you do, we're going to put you in the penalty box. And so post-COVID, what those operators said is, all right, we're going to live out of cash flow. And if there are not good accretive opportunities to add shareholder value, then we're going to buy back stock and pay down debt and do things that responsible, prudent operators would do. And so, unlike other times in maybe a similar price environment, you have not seen companies kind of going YOLO. In fact, the opposite. You've seen companies saying, "Hey, we're going to drop rigs. We're gonna build out our duck inventory. We're not gonna just continue to drill and provide those sort of swing barrels." And so, I would argue that we don't necessarily know it yet, but that if you took out natural gas liquids, NGLs, from the sort of DOE statistics, I think you would probably see that our domestic production oil wise has probably peaked. Again, like whether or not that's going to be readily apparent in the data for the next couple months, I'm not sure, but I think that's a very real possibility. And certainly the stages of growth that we've had over the past couple of years and how that's sort of balanced and bailed out the broader global market, I don't know that those barrels should be expected. I think the industry's shown quite a bit of capital discipline, and I would probably, in this price environment, I would continue that. I would expect to continue to see that continue.
I'd 100% echo everything Jordan just said. The capital discipline over the past 6 years has been 180-degree change from where our industry was prior to where we are today. So the drill baby drill component is no, because you look at it, it's like, okay, at some level, this resource is so valuable. I'm not just going to produce it to produce it, and it all becomes supply and demand. That we can keep drilling. OPEC wants to retain market share. They're going to flood the market with oil. So all we're doing is getting to a place where you're flooding the market, drives prices down, and then everybody's stuck. In regards to the tariffs, we have seen that on the pipe side, casing side. Steel has gotten expensive. So that's where we are definitely seeing it on the from an economic standpoint. Now the flip side is we have seen a reduction in cost in other aspects of our business. So it all comes down to economics. I mean, if we're not looking, and Jordan uses the term of manufacturing, and I can't disagree with that. But if we're not seeing a 30% rate of return, a 3-to-1 on our money, we're probably passing on that project. And that's the other reason that I think that the Permian is so attractive at so many levels. The true break even cost to produce that barrel of oil is among the lowest in the country. So we're constantly running different models to show what that true break even is. And when I'm saying break even at a 30% rate of return, because there is risk. I mean, we know the rock is there, but once again, I think people need to realize you're drilling a hole down 2 miles vertically and then 3 more miles horizontally. There's a lot of stuff that can go wrong. So even though that we know that oil's there, doesn't mean that every well is going to be this absolute gusher. So you do have to kind of manage risk, and the other part of that, another big shift for us on the operational side. We got into a couple situations when we were in the non-op space where prices did fall. You reach out to the operator, and once again, they've got a strong hedge book, they've got a plan, and they're going to keep going. So the non-operator has to either participate or go non-consent. Going non-consent isn't good because you basically just gave it away. And so you're kind of in this between a rock and a hard place of, I don't want to produce it, but you kind of have to. You have to do whatever the operator said. So moving into operations really allows us to control that timing. We can pivot within days if prices change, costs change, and we don't like them. They'll shut it down. And I think you're seeing a lot of that in our industry right now when Jordan's talking about capital responsibility. I've been down that road of operating well beyond free cash flow models, taking on a ton of debt, and not ultimately making the returns. And the funny thing is, a lot of the times that was capital driving those decisions. You've got to spend the capital, you got to spend the capital, you got to spend the capital. Well, when prices change, you're kind of your own worst enemy. And we've seen it on the natural gas side. You can produce so much of it, it becomes a simple supply and demand component. You got too much on the market, you drive prices down, and now you're upside down on a project, and the easy group to. I'm not saying the industry was completely innocent in the fact, but they're an easy group to kind of get chunked under the bus. So I've been really proud of the industry as a whole, of really taking a hard look at this and say, let's operate like any other normal business would. Operate within free cash flow, make distributions to partners when that makes sense, and pay down debt. So it's been a great.
As you think about kind of big drivers that that push the industry forward, maybe talk a little bit about whether it's artificial intelligence and some of the computational power that's going to be required to be able to drive that. You think about just electricity demands, historically kind of 1% annually. Now it looks like more 2-3% per year, which is meaningful on the margins. Any commentary on what you guys see coming out the front windshield that could drive increased demand for oil and gas, not just here in the U.S., but also globally?
Yeah, I mean, I think AI is the big talking point kind of across the world, and I think it's real. I mean, that there's what Trump's come out wants Pennsylvania to be the world the world's AI epicenter, and they're looking to plow $90 billion up there to kind of make that happen. And so yeah, with that, you're going to need a reliable source of energy to supply those energy needs. The grid, in my opinion, is not capable of producing those current needs. So there's going to be a big transmission component that's associated with that. And then if we're just looking at it globally, I know it's easy to kind of look just at our own little world here, and the U.S. is we consume a ton of energy, but you start to look at some of these emerging economies, and we're talking about groups that are moving from wood and coal to natural gas. Just the amount of energy needed at a global scale is going to be incredible. And I can't quote you a percentage or number what that looks like, but what people want is they want to be able to charge their cell phones. They want to be able to drive to work. They want to be able to turn on their lights. They want to be able to heat their water, simple stuff. But all of that takes really reliable energy. And, from a renewable standpoint, I think it's, I think it's good, but I think we need all forms of energy to continue to grow. And I think when people start to play these zero-sum games of oil and gas is terrible, we need to get rid of it. Well, I guess that's your opinion, but I don't think people realize, a renewable source of energy is great, but it's intermittent. You can't always rely on it. Natural gas, we've got a ton of it in the United States. Um, all of us on this podcast will be dead and gone before we're out of fossil fuels. So I think if we can get as an energy industry, and that's including all forms of energy, if we can get to a place and understand that we're all needed for a long time at a global scale, I think that's a healthy place to live. I think the renewables versus fossil fuel groups have gotten so contentious on both sides of the fence, kind of fight for that space. It's really kind of taken away from the bigger picture of, we need energy. So let's use it. Let's be responsible. That's the other thing with, the horizontal really revolution that we've seen here. The amount of wells and oil you can produce from a very small surface footprint's incredible. So anyway, there are both sides of the fence that make sense. And then at a bigger scale, like our operations, we're using 50% recycled water. Obviously, you got to use a lot of water, sand, fluid to hydrofrack those wells. So as we continue to get to places that we care about the earth too, and we're looking for ways to really, make a better impact from that standpoint as well.
Yeah, I mean, you can imagine, not a whole lot of people in my business school class went into oil and gas, and I wouldn't say that it's a extremely popular topic. We just had our 10th anniversary, or not our 10th reunion, and last year, and it's still, I mean, people still look at me like I've got the COVID in early 2020, and kind of like side eye a little bit. John, I'm sure, could add some color to that were he not skipping this podcast recording right now, but we'll throw him under the bus later. But I think part of my framework And I think as believers, like part of our worldview needs to be, as we're looking at vocation, is, how does what I'm doing impact human flourishing, and and we think about that in multiple levels from the fortress lens. But broadly speaking, as an industry, I think like you can argue that there aren't very many industries that can have a direct impact on human flourishing like the oil and gas industry has, and I think will continue to in the future. I mean, I think most of your listeners have probably seen there's a chart that I believe is from the World Bank originally, where it talks about energy density per capita and then also like GDP per capita. And basically, when you look at that chart, you'll see there is no such thing as an economically advanced economy that does not require energy. And especially when you're moving from an emerging sort of when you're trying to move up that scale, hydrocarbons, it's hard for people to understand the energy density contained in a molecule of hydrocarbon. It's undefeated. It is absolutely undefeated. And the LNG phenomenon, being able to export natural gas around the world, I think is probably one of the, if carbon emissions is like if that's your litmus test for what you care about, then you should be the biggest booster of LNG on God's green earth. Because you look around our globe today, as Chaz mentioned, don't just look at the US, look globally. And what you'll see if you look globally is in the past 25 years, you can find a bunch of magazine and newspaper articles from the early 2000s talking about the death of King Coal. I've done this before for a talk that I've given about the death of King Coal, and coal has reached its demise and everything else. I think in the year 2000, we burned something like globally, I don't know, I think it was 6 billion tons of coal a year. And I think this year it's going to be closer to 9 billion tons a year of coal. And most of that's being driven by the developing world, and then India and China. And if we can displace even a third of that electricity generation that's being generated currently with coal, with LNG, again, if what you care about is carbon emissions, then that's the biggest thing that we can do. And I think globally, if we can, again, to Chaz's point earlier, that reliability is a huge deal. And so domestically in the United States, I think we ought to look at, especially from the natural gas perspective, it's like we were kind of born standing on third base. Honestly, like we have just an insane natural resource, and we've now had a bunch of an industry that has figured out how to get it out of the ground in some places that they maybe didn't think it was possible to get out of the ground 20 years ago. And I think from a domestic standpoint, if you look at AI, if you look at data centers, if you look at manufacturing, all those things, we ought to be able to have dirt cheap. And we can talk about in a second why we don't have cheaper electricity costs right now. It's not the price of natural gas when you look at the data, but when you look at the plentiful nature that of the natural gas that we have in our country, it ought to be both a boon for us domestically and a huge thing that we export human flourishing to the world through our LNG export capacity. So I'm a little bit fired up about that particular component of things.
I love it. I
Just
think
a
it's
little
worth, we can tell. And I think it's worth kind of calling out, because this is something I wouldn't have known pre-prepping this podcast, just to, speak from a place of vulnerability here, that when we talk about energy consumption, energy demand, oil and natural gas are two different things. And you've got oil predominantly used for transportation. Think what you put in your vehicles. Natural gas, what these guys are talking about, the question that Luke asked, is what helps power the grid, the interconnected set of wires and high voltage lines that gets electricity to us, each of us day to day. And that's natural gas that's powering the grid. That is 70% of US energy consumption, followed by those things like renewables, which now you get into wind, hydro, solar. And then you've got nuclear, which is kind of coming further online than Jordan just talked about it. Coal, which is a little bit kind of fading here domestically, but still in high demand, high consumption elsewhere. I could have probably just totally blown that up as a guy that's a novice to this space. But what Jordan and Chaz are hitting on that is so key is, hey, we have got abundant resources in the hydrocarbons world, which is oil and gas, and it furthers human flourishing. Chaz, how would you clean up what I just said?
You did a great job. I mean, I just think we need to, once again, embrace all sources of energy. And yeah, I'm glad Jordan actually got into the, human flourishing component, because both of our businesses, I mean, that's a huge component of what we do and focus on. So we're all, we're here, we've got investors, and we've been, entrusted to make a return on those components. But I think all of us on this, podcast right here, there's a bigger component to life. And if you can help make somebody's life better, and ultimately whatever that may mean, I think for all of us that's a way to share Jesus with people. But it is there's people that as we know, I feel like we in the US we get without offending anybody, we're super spoiled. And so I think we really forget of how the rest of the world, the vast majority of the rest of the world lives. And so for us to be able to jump in one of our 2 cars that our family owns, and we're able to, drive and pick up, McDonald's, and then drive to church and worship and do all these different things, all of that is driven by energy. And I know there's different components there, but without the energy component, you're not able to do it. And so, I know Jordan and I are super passionate about these items, but and even looking at, to his point in regards to natural gas, essentially, if you're looking at kind of an equivalency component, 1 barrel of oil equals 6 MCFs of gas. So on an actual energy equivalent basis, well, natural gas trades super low even compared to that. I mean, we're half of there. So even at a, from a cost standpoint, from a availability standpoint, from a carbon footprint standpoint, all these things have continued to get better and better in regards to creating that energy, and ultimately, other people can flourish from it.
It's awesome.
This idea of how oil and gas ties into human flourishing, not just here in the US, but also globally, I think is an often overlooked reality of the work that each of you does. And so I think it's really, really interesting. Your alma mater, Jordan, has a whole institute focused on human flourishing. And that's not a phrase that you often hear associated with oil and gas, whether it's upstream, midstream, or downstream. But it absolutely ties into this idea of enablement and how do we enable the way of life that we enjoy here in the U.S. For others around the world. I think it's a really awesome take. So back over to you.
Yeah,
Richard.
and honestly, I'd love to see just domestically, Chaz basically just called out Americans as, "Hey, we're soft and we're entitled and we don't know how good we've got it." And he's, I mean,
Don't give my address out.
he's right. Yeah, don't get. I mean, Chaz and I would first of all say that to the guy in the mirror, but I think it's wild, the hostility in some corners of our country to the idea of, say, even just like, let's just take natural gas as an example, and like I said earlier, and like, when you look in the state of Texas, like, we could have significantly cheaper electricity per kilowatt hour to the average person in Midland, Texas, Houston, Texas, Dallas, Texas, wherever you are. I can only speak to Texas because that's what I'm more familiar with. But even in a place like Texas, like, we have not built out the infrastructure to use natural gas to generate baseload power on just a day in, day out basis. We've added something in Texas like 6 million people in the last 5-10 years to our state. And we effectively have added little to no natural gas baseload power generation capacity. We've shut down a handful of baseload natural gas power plants, and we built a bunch of peaker plants, which basically are designed to just come online when the price for electricity spikes because the wind stops blowing or the sun's not shining. But subsidies have wrecked that market so much that even though if you look back 20 years ago, there was a stretch there where natural gas was $12 per M, and the average price per kilowatt hour for residential electricity was somewhere in the high single digit cents per kilowatt hour. And then you fast forward to today, and the price of natural gas is $3 an M today, and if you look at, depending on where you are, it's 13 cents, 15 cents, 16 cents a kilowatt hour. And the reason for that is like we're having to basically pay double for the unreliability of the grid with respect to the subsidies given to wind and solar. And so when you look at if we could cut, if the public policy realm were geared more towards utilizing the natural resources that we have, say like natural gas, and you could shave a couple cents per kilowatt hour off people's electricity bills for most middle and lower class people in our communities, that would be a huge like net to their bottom line. And so when I think about things like that, I can think of few industries that could produce that kind of outcome. And so when we talk about things like this, I can get a little bit frustrated just at the fact that people's reticence to sort of have a regulatory environment conducive to that is so it makes no sense, and it's rooted largely, in my opinion, in sort of an ideological it's putting basically putting not being able to see the forest for the trees, and is something that is very frustrating to me in our just current environment. Even though we're in a conservative state that you would think would not be hostile to that, and we've got sort of you've got an administration that in theory is wanting more from the hydrocarbon industry, but still it's not at a place where you could see capital deployed into that arena, for fear of the thing snapping back. So that's a very frustrating element of it.
Man, it's helpful to hear you guys explain it and unpack it, especially kind of coming from the front lines and knowing all the dynamics. Chaz, I'd vote for Jordan. I don't know if it's Midland mayor or something like that. He sounds pretty eloquent as he breaks it down.
You ought to meet our real mayor. She's great. Lori's way more eloquent than Chaz and I ever dreamt about being. You should have had her on here, but
I try to hide under a rock, guys. Jordan's really good at this stuff.
And Chaz actually is Midland royalty. His dad was the mayor of Midland, so he's got a lifetime key to the city. So
that's what I'm talking about. Well, hey, let's close with this. This has been amazing and extremely helpful. As Luke mentioned, timely, and also just something we haven't spent near enough time kind of digging into on this podcast. Lightning round, Jordan and Chaz. Chaz, we'll start with you. What's God been teaching you in and through his word lately? Take our listeners home with some wisdom.
Balance. I love doing deals. I love what I do every day. But balance is key. I've got a 15-year-old, 13-year-old, and 11-year-old. And just being there and spending time with them is incredible. So
I love it.
That balance is where I'm at.
Jordan, what about you?
Man, I'd say I'm in a season where I feel like I'm trying to. I would say I'm in a season where God is working on me about contentment and identity, and our industry can be challenging if you have a high need for achievement personality, or like me, I'm a pretty hardcore Enneagram 3. Like if there's something to compete about, I'm gonna let's roll up the sleeves and let's
Me
I want to
too,
be the
man.
best. Yeah, what's the point in doing it if you're not going to try to be the best? If you're not going to try to win? And I think in our industry, there's so much capital, and Chaz and I have lots of people in our age bracket who have built, really massive businesses and had very public successes, and are running publicly traded companies and things like that. And I think this idea of being content with where God has you. And we felt like God was pulling us in a direction of having something not on a huge scale, not going and raising $1 billion of private equity capital, not doing something at a slightly smaller scale, and trying to kind of being radical about, hey, how are we going to prioritize being present with our families, being present in our community, at our church, and these sort of things. And it can be hard, for me to go, well, so what does it mean if I'm not the best? Like if I'm not the best or the biggest, at what I do, like what does that actually mean? What does that say about me? And so I think kind of trying to unpack that has been, which again, to someone listening from the outside, that probably feels very obvious, but I think my whole story has been trying to compete and trying to be the best, whether it was at school or getting the best job or, all these things. And then you get to the point where you start playing that out to its natural conclusion. And what's the scorecard going to be now? It's not any of those things anymore. It's now going to be, well, what does your what does your balance sheet say? Like what's your professional success been from a dollars and cents standpoint? And just sort of having God try to, I think, just beat into my thick skull that's the wrong scoreboard to be looking at in my life. And so anyway, that's been a journey really over the past 5 years of me looking at where God has me and looking at that more as a steward and saying, hey, God's given me this vocation to steward, and he's given me these things to steward. And it's not necessarily, I want to do the very best job that I can with those things, but I do not need to, I do not need to do whatever I can to try to be the biggest or the best or the most well-known or whatever those things may be. Because candidly, I'm the trail of destruction that would probably leave in my wake would be far more significant and long lasting than any accolades that I would get along the way. And so that's been sort of a painful journey, a painful road to walk down, but it's been really sweet for our family.
Man, that'll
This
preach.
this issue of identity is one that comes up again and again on this podcast, and it's one that I think a lot of our listeners wrestle with is from where do we draw our sense of identity? And so you speaking of that in the context of oil and gas is super relevant, Jordan. You and Chaz have been faithful stewards of what God's entrusted to you in this realm. We are grateful for both of you dropping wisdom on what it looks like, not just to do your work with excellence, but also to do it in a way that enables human flourishing, which is a topic that's near and dear to the heart of all of our listeners. So we're really grateful for you all taking time, and we wish you well as you continue to run the race that God has for you. Thank you.
Hey, thanks for having us. Really appreciate it.
Thank you very much.
We'll catch you next time, friends. We appreciate it.
Come for content, stay for community. Join a faith-driven investing group online or in person. Visit faithdriveninvestor.org. That's faithdriveninvestor.org.